Investing, the final frontier. These are the journeys of Spaceship Voyager, its continuing mission to explore strange new companies, to seek out 10-baggers, and at no cost to you to boldly go where no one has gone before. Well, almost. Hello, welcome to Invest for the Future. It's been 18 months since I reviewed the Spaceship Voyager investing app, and there has now been enough time for us to develop a more informed view of its performance and its worth. Of course, my comments and views cannot be taken as individual financial advice to use the product, or any other product mentioned in the video for that matter, as these thoughts are just my opinions. And to be clear, I do have no financial affiliation with any of the services that are mentioned on the channel at any time. Do your own research and make your own decisions. So with all that out of the way, let's boldly dive into the performance of Spaceship Voyager. I think one of its more attractive features is the fact that for investors with very small amounts of available cash to invest, you can invest with absolutely no fees up to a total of $5,000, making it an ideal option. And also there are no monthly account keeping fees either. Now, while this is a feature worth considering, it is their returns that are far more important, along with the implied risk that you might be taking on by selecting their more aggressive universe option rather than the more conservative origin option. They now have a third option available called Spaceship Earth, but has only been funded since November of 2020, and so we don't really have any measure of the success of the strategy behind the decision-making process for this fund. So what have their returns been, and how do they compare with the performance of the other micro-investing apps? Well, let's start with the others first and save Spaceship for the big finale. CommSec Pocket App offers the opportunity to invest in any of 7 ETFs that are listed on the ASX. You could invest in any combination of them that you choose, depending on your view of the future potential of the industries and the sectors that they cover. The 7 ETFs are the Aussie Top 200, the Aussie Dividends, the Global 100, Emerging Markets, Healthwise, Sustainability Leaders, and Tech Savvy. So depending on the ETFs that you chose, returns could have been very strong or rather meagre, and that's where the decisions that you made about the balance of your investments would have been very important. Your average annual return across the 3 years could have been anywhere between 4% and 27%. It just depended on your ETF choices. Across the 3-year time frame, VAS, the ASX 300 Index Fund, returned 6.89%. So provided you were underweight the Australian market, you could have done quite well by using the CommSec Pocket App. Now, I know it's only been active since the middle of 2019, but I hope you sort of get the idea of how it could be used and what range of returns might be possible. The other player in the micro-investing space is RAIZ, and for a more complete look at its offering, you could watch the video that I posted in June of 2019. The returns for their investment options are on screen, ranging from negative 0.46% to 4.33% across 1 year to the end of June 2020, and 4.04% to 7.57% across the 2-year time frame. Now that doesn't look all that special compared to the CommSec Pocket App, but we need to remember that the market is actually up 10% since the end of June. So let's look at the share price change of the CommSec ETFs from July 1 of 2019 to June 30 of 2020 to get an idea of the relative performance. Those performances are on screen, and excluding dividends, the returns range from negative 17% up to 31.6%. So across that 1-year time frame, you could have massively outperformed RAIZ, but then again, you could have massively underperformed it depending on your blend of ETFs. As is generally the case, investing in international shares would have been to your advantage. And finally, coming to the returns for Spaceship. Across 1 year to the end of November, Spaceship Universe returned 54.19% and has returned an annualised 30.33% since inception in May of 2018. And the Spaceship Origin portfolio has delivered a one-year return of 5.62% and an annualised return of 10.93% since inception, also in May of 2018. Comparing them against each other is a subjective call though, because just a raw comparison of the returns does not consider the risk profile or the investment objectives of the investor. But if I'm going to put my money into any of these, I would be willing to back the investment strategy that's being employed in the Spaceship Universe portfolio. They describe their approach as investing in companies that meet the criteria of where the world is going. This is a bit similar to the assessment that ARK Invest make in deciding whether a company meets their criteria of disruptive innovation. Spaceship hasn't delivered the stellar returns of ARK, but I do look with great envy at their returns, which are more than 10% better than what I've been able to achieve. 2.5 years though is not a long enough track record to bet the bank on these guys, but you can't argue with their performance since they made their debut. Investors do need to remember that Spaceship is not traded on the ASX, and investors will need to fully read their product disclosure statement to understand the terms and the conditions under which the investment is made. In particular, investors need to be aware that withdrawing funds may take up to 5 days, and depending on circumstances, withdrawals can be temporarily withheld. But for investors just starting out in the market, I think Spaceship Universe has a lot of positives worth considering. I'd summarise these as follows. Firstly, no entry costs. Then there's no management costs on account balances up to $5,000. There are no withdrawal charges if the account balance is less than $5,000. And there is a diversification across a range of high quality international stocks. And lastly, they are delivering above market returns, and there's a good chance this can continue. But it's not all plain sailing though, as there are never any guarantees, and it's always possible that any basket of stocks could underperform the market. And if the Aussie dollar appreciates at the same time, then the returns might be noticeably less than an investment into VAS or STW that are totally invested within Australia. But that's something that all investors should factor into their decision making when deciding how much to invest and how diversified they want to be. I am becoming more comfortable with the idea of using ETFs with my investment plan, and even though it's not an ETF, including Spaceship Universe into that mix is something that I am considering. While the majority of the funds are invested in the US, it's not as concentrated as some ETFs that could be considered, with the breakdown as shown on screen. And even more interesting to me is the fact that they have managed to place 1/6 of the portfolio into stocks that are domiciled within Australia. You don't often find that within international type portfolios. So if I were to grade the micro apps, I'd definitely be putting Spaceship in first place. But more importantly, what do you think? And if you want a very recent and more detailed update on Spaceship Universe's performance, you could watch Michael Schmidt's latest post. I'll link you to that in the description. In fact, I will be having Michael as a guest on the channel very soon, when we will be chatting about disruptive innovation and his thoughts about the sectors that could possibly be the growth hotspots in the next few years. And I'm sure we'll find other areas of interest to add to the conversation. So thanks for watching this one though, and I'll catch up with you again very soon.